Drake just got an email from HR about his 401k benefits. Subject line, action required before year end. He marked it as read and went back to scrolling. HR stuff. It can wait. Daniel got the same email. He spent 12 minutes on it, and those 12 minutes are going to be worth thousands of dollars to him. Done, updated contribution rate. Confirmed my investment allocation. Checked my match. All set. There are real deadlines inside your 401k that close permanently. Most people never know they exist until it's too late to use them. This video changes that. Before we get to the deadlines, let's talk about the thing Drake has been missing the longest: the employer match. Here's how it typically works. Your employer agrees to match a percentage of what you put in, up to a cap. A common structure is a 50% match on contributions up to 6% of your salary. That's not complicated, it just means put in 6%, your employer adds 3% for free. Instantly, on a $50,000 salary, 6% is $3,000 from you. Your employer adds $1,500. That's $1,500 of free money deposited directly into your retirement account, in addition to your own contribution. The return on those matched dollars, before the market does anything, 100%. Nothing in legal investing gives you an instant 100% return. Not index funds, not real estate, not anything. But Drake doesn't have to look far, it's sitting in his benefits package. Okay, I'm looking at this, it says my contribution rate is 0%. I've been here 2 years. 2 years. Roughly $3,000 in employer match he will never get back. Not a mistake he can fix retroactively. That money is gone. The fix going forward is simple: log into your company's 401k portal, usually Fidelity, Vanguard, or Empower, and set your contribution rate to at least the match threshold. Today, not next paycheck. Today, now let's talk about what's actually new in 2026. The Secure 2.0 Act, signed into law in late 2022, made dozens of changes to retirement account rules. Many of them are phasing in over several years. 2 are relevant right now. First, enhanced catch-up contributions for people aged 60 to 63. Starting in 2025, if you're in that age range, you can contribute significantly more to your 401k than the standard limit, up to $11,250 in catch-up contributions, on top of the regular limit. This is a permanent upgrade for that age group. Second, a rule change about how catch-up contributions are treated for high earners. If you earn above a certain income threshold, the law now requires your catch-up contributions to go into a Roth, meaning after tax, rather than pre-tax. Check IRS.gov for the current income threshold and effective date. What this means for you, if you're over 50 and high earning. The way you've been doing catch-up contributions may no longer be available to you in the same form. The window to use the old structure closes. Acting now, before December 31st, gives you the most flexibility. I checked the Secure 2.0 updates in January, made my adjustments before anything changed. 10 minutes of reading, years of impact. Here's a deadline that applies to everyone, regardless of age or income. The 401k contribution deadline is December 31st of each year. Unlike the Roth IRA, which lets you contribute until tax day in April of the following year, your 401k contributions must come out of your paycheck before December 31st. If you miss it, you cannot go back and add money for that year. This means if you realize in November that you've been under-contributing, you have maybe 6 to 8 pay periods left to catch up. And some payroll systems need 2 to 4 weeks of lead time to process a rate change. The window is real, and it closes. I just tried to increase my contribution for this year. My payroll system says the last change window was November 15th. I missed it. A $12 calendar reminder on November 1st would have prevented this. Set it now, for every year going forward. One more thing Drake does wrong, he treats his 401k like an ATM. I needed cash for a car down payment, so I just took a little out of my 401k. It was only a few thousand. Here's what that withdrawal actually cost him. If you withdraw from a 401k before age 59 and a half, You pay a 10% early withdrawal penalty on top of ordinary income taxes. If Drake is in the 22% federal tax bracket and lives in a state with income tax, the total tax hit could be 30 to 40% of whatever he took out. On a $5,000 withdrawal, he may have actually received $3,000 to $3,500. The other $1,500 to $2,000 went to taxes and penalties, and he permanently lost the future growth on that money. There are a few exceptions called hardship distributions for things like severe medical emergencies or total disability, but a car down payment is not one of them. For that, there are better options: a personal loan, a car loan, or simply saving in a separate account. Your 401k is a retirement vehicle. It is not an emergency fund. Do not touch it early. Here is your 4-step action list for your 401k this week. 1. Log in. Find your plan through your employer's HR portal. If you've never logged in, reset your credentials and look at what you actually have. 2. Check your contribution rate. If it's below the employer match threshold, raise it to at least that level today. Missing the match is leaving guaranteed money on the table. 3. Check your investment allocation. Most default settings are too conservative for anyone under 45. Look for a low-cost target date fund or an S&P 500 index fund option. 4. Note the December 31st contribution deadline. Set a calendar reminder for November 1st every year to review your rate and make any adjustments with enough lead time. Your 401k summary. The employer match is the highest guaranteed return available to most people. Capture it completely, every year. The Secure 2. Zero Act changed the rules for catch-up contributions. If you're over 50, especially in the 60 to 63 range, there are new limits that could work in your favor and new requirements for high earners. Check IRS.gov for your specific situation. The contribution deadline is December 31st, not April. December. Early withdrawals before 50, 9.5, cost you 10% penalty plus income taxes. It is almost always the wrong decision. This video is for educational purposes only and is not personalized financial advice. If this helped you, subscribe. We post a new personal finance video every week. Next, do you know how much cash you're legally allowed to move in and out of your bank account before the IRS gets notified? Most people guess wrong, and some accidentally break the law trying to protect themselves. We'll cover that next.